Hello and welcome to my YouTube channel where I try to share my knowledge on technical analysis on stocks and indexes for educational purposes for the viewers. Now in this video, I have covered Infosys, and before that I would like to cover the Nifty IT sector chart as to what it's saying. Now let's look at what the sector chart is indicating to us right now. In the monthly, we can see a black Marubozu candle has been formed, more or less done with just two more trading sessions left for the month. And it's likely going to close below the conversion line, which is the first level of support as per Ichimoku. In the weekly, we can see the index dived into the cloud, with a gap down. This was courtesy the Infosys results, which had come post market, and we had a long extended weekend. And this was the reaction on a Monday, which saw the massive gap down inside the cloud. So trading inside the cloud right now in the weekly. Before I go to the daily, I would like to show what the hourly is doing out here. In the hourly, the index has made a bullish RSI divergence out here. You can see a divergence forming out there, which gives a confirmation of some bounce back if possible, if it starts sustaining above 31,850 in the hourly. So that would be the earliest confirmation from the hourly charts. That's what they're. Now let's have a look at what the daily chart is saying. In the daily, we can see a bullish candle formation finally after such a long slide. It's a hammer formation, usually a reversal signal, but it requires a follow through candle, which would again, yes, above 31,850, it would start sustaining. We would consider it a good bounce back coming. The other thing would be interesting to watch out here is that the baseline, the Ichimoku baseline, is now gone far from price currently. So it's just, that's an indication that the stock downtrend, the down sharp moves that we're seeing might pause out here. The index could go sideways to try to drift back a little bit from here. Now, one more interesting thing which I found out here was that the slanting lower channel is where the index is now started taking support. This is the prior swing low, we need a high, and then low again, a bounce back to a lower high. And now to this lower low out here, we can see that the channel is trying to stop this decline for the time being. Now, if things were to move above 31,820, we could see at least a dead cat bounce all the way back to 33,000 to 33,500 on the index. So not a good area to be fresh short now. Intraday would be a different story. Specific stocks would be a different scenario, but overall the index is suggesting pause into at least a bounce back. But there could be a dead cat bounce, could be a throwback of some kind to try to cover this gap area, maybe. All things possible from these current levels. Now, before I share my analysis on Infosys, I would like to inform viewers that I have launched my webinars for the month of May, and they're going to be in 4 different modules, from the basic level to harmonic patterns to Ichimoku to the mind and market trading, psychology, risk management. They're going to be on the weekends. They're going to be interactive with lots and lots of examples for each and every scenario, and with a lot of sharing and follow through guidance also. For details for the course, I've shared the link. Please, if those interested, please kindly look into it. Now let's have a look at what the Infosys open interest in the option data for the month of May series is suggesting. It starts day after. Now, again, we can see that out here, the 1560, the current price, is seeing a decent call put, almost not Not too much of a difference on both the sides. So the put call ratio is quite flat out here. In the case of info, the spot price currently, on the put side, we below 1560, we can see 2000 open interest built up at 1500, and then at 1400 psychological levels, round figures, you can see 1000. So decent amount of writers out there. While on the call side, there is heavy writing from 1600, which is massive at 6000. Bulk of it, quite a decent amount written today. Again, a huge amount written today in 1700 calls out here. So this area, this balance area, the balance of the call looks like something which was written when the results came out mid-April. So a lot of writing must have taken place on higher premiums out there, which have decayed over a period of time now out here. So, what is more interesting out here is that after such a sharp decline that we've seen in price, there is confidence on put writers. We can see put writing happening out here, and again out here. Yes, compared to the call side, it's much less, but that's natural for a stock which is declining so fast, which has declined so fast. So, this is interesting level happening out here. Now, let's see what the future open interest is suggesting for Infosys. So it has a minor fall today, 1.5%, but very little change in UI took place out here. This is looking more like a rollover kind of move happening out here. But what is more interesting is the last 5 days of data. So we've seen the decline being reduced down to just 2% in the last 5 days with very little change in open interest, 2%, suggesting that fresh shorts are not being built in this level currently. Otherwise, this could have been around 5%, 6%. Something would have given way that yes, there is more selling pressure in Infosys, can fall a bit more, but that's missing out here. Now let's look at the charts and see what they are trying to tell us at this level of, with it being one of the big leaders in the IT sector, with the IT indexes suggesting a pause in the fall. So, what is Infosys suggesting going forward? So, let's have a look at the monthly first. Very similar candle to the sector candle, which is a black Marubozu candle, again closing below the conversion line, which is the first line of support. So that's been reached. Uh, let's look at the weekly. Inside the cloud, the results reaction right inside it right now, trading inside the cloud. Okay. Now again, before I go to the daily, let's have a look at the hourly. Here too, we can see RSI divergence, positive divergence taking place out here, which is a good sign for the stock from the point of a bounce back, if not a major reversal, then at least a bounce back. In this case, the RSI is suggesting if it sustains in the hourly, since it's the hourly divergence, above 1560, it could see some pullback happening. Let's have a look at the daily chart of this. The daily is actually a black Marubozu candle today, but a candle which is being formed after a major sell-off. But being here, I would have said yes, serious one, but this is happening at this end. Nevertheless, it's there. And apart from that, if we go and look at what it has been doing all this time, the highs, from this high, this lower high, was the completion of a bullish harmonic dragon pattern ended, it gave way, and we had a sharp fall way before results. The stock started declining. This is towards the end of March when reaction started coming. Maybe the impact of the Russian-Ukrainian crisis could have triggered something out here. But overall, we saw this decline after the completion of the bullish harmonic dragon, and now this has taken place. Now here too, we can see that the baseline is very far from the price now, again suggesting an oversold zone in the short term, which might pull the price back or halt this fall for the temporary short-term purposes. So above 1560 odd levels, the sustaining, we could see the stock, try to do a dead cat bounce or a pullback short covering rally till 1625 to 1675. This was the base area from where it fell. So it could go back to try to cover this gap down out here in that sense. So all in all, not an area to go short, fresh shorting, at least in the IT sector chart is saying, and in Infosys particularly, if it triggers the RSI divergence confirmation. And from an investor point of view, those who like to add IT stocks to their portfolio, this is an opportunity to do small portions of SIP. Remember, this may not be the bottom for either Infosys or other IT stocks. Could be consider it like a oversold bounce back happening. But from investment point of view, an opportunity lies out here for an SIP point of view. Uh, and with keeping in mind for the more downside, so plan your investments accordingly in this stock. I hope this video is of help to you. So please don't forget to like, share, and subscribe to this channel. And disclaimer before we go, this is not a trading investing advice. It's an educational video. Please do your research thoroughly and then take a decision on investing. Until then, happy investing. Bye bye, everyone.